Yeah.
तुमने लिखा सा मारो चलो करे थम्स अप कर लो Hello friends, welcome back to our GKCCA Foundation revision classes as organized by JK Shah sir. And I'm sure that you would be studying in full swing. The admit cards are released. So now there would be a lot of pumping in your heart for putting pressure on yourself for clearing the examination in the best possible fashion. All the very best. Yesterday we had studied 3 chapters. Today we are supposed to study 2. The first one we start is with BRS. The second one would be final accounts. If we have time, then we'll think about the third one. But let's start with BRS charter. BRS, as you all know, the full form is Bank Reconciliation Statement. Bank Reconciliation Statement. So it's a statement, first of all. Now chartered, the word bank. What does the word bank mean? Now chartered, when a business organization does a transaction with bank, those transactions are known as banking transaction. Business records all transactions with bank in a book called cash book. Remember this. Business records all transactions with bank in a book called cash book. Bank records all the transaction with customer in a book called passbook. In a book called passbook or bank statement. Business records all the transaction with the customer through an account called, through a book called cash book. Bank records all the transaction of the customer through a book called passbook or bank statement. Now chartered, if I deposit money in the bank, I will write in cash book, bank will write in passbook. Fair enough. Another thing. When I deposit money in the cash book, my bank balance increases. So my asset increases. If my asset increases chartered, I will debit. As soon as I deposit money into the bank, my bank balance increases, my asset increases, therefore I'm supposed to debit. Similarly, when bank receives money from the customer, bank's liability increases because whatever I have deposited into bank, that money I can withdraw from bank at any point of time. And similarly, bank has to pay me that money at any point of time. So from my point of view, it is money receivable. From bank's point of view, it is money payable. Anything receivable is an asset. Anything payable is liability. So for me, it is asset. For bank, it is liability. So I will debit in my cash book. Bank will write it on the credit side because bank's liability is increasing. Liability increasing, credit. So again, to put it in the nutshell, when I deposit money into the bank, my asset is increasing, I will debit. From bank's point of view, bank's liability is increasing, therefore bank will credit. Am I clear? When I withdraw money from the bank, my asset is decreasing. If my asset is decreasing chartered, I will credit. Yes or no? Yes. If I withdraw money from the bank, my asset is decreasing, I will credit. But bank's liability is decreasing, therefore bank will debit. Okay. So when money goes into the bank, cash book debits it, passbook credit it. When money is taken out from the bank, cash book credit, passbook debit. That is why when you get a statement from the bank, SMS from the bank, your account has been credited, you feel very happy. Because when passbook gets credited, chartered, bank balance is increasing. When you get an SMS, your account has been debited, we feel sad because our bank balance is decreasing, chartered. Am I clear? Yes, no? Yes, sir. So first thing, Business records all the transactions with bank in a book called cash book. Bank records all the transaction with the customer in the book called passbook. Cash book and passbook work in a opposite direction. So when cash book increases, it's debited, decreases, credited. Passbook, it's reverse. So if I talk about receipts, money coming in, receipts are debited in cash book, credited in passbook. Payments are credited in cash book, debited in passbook. Fair enough. Now, Judge, when I go on depositing money, I go on withdrawing the money from the bank, I keep on recording in cash book and bank keeps on recording in the passbook. At the end of a certain period, the balance should be same. If I am saying that I have got 30,000 rupees in the bank is saying, no, you don't have 30,000, you have got 25,000 only. I say, how? So that means at the end of a particular period, there might be a difference between bank balance as per passbook and bank balance as per cash book. Yes or no? Yes, sir. At the end of a particular period, there might be difference between bank balance as per cash book and bank balance as per passbook. The reasons of differences can be many. I have deposited the check. Bank has still not recorded it. I have issued the check. Bank has still not recorded it. Bank has charged bank charges. So passbook has decreased. Balance in the bank has decreased, but I don't know about it. So I have not recorded. Somebody directly deposited money in my bank account. So my passbook has increased. I have still not recorded. Correct. Bank has made some payments as per standing instructions given by me. So my passbook has decreased. I forgot about them and I did not record in my cash book. So that means checks deposited recorded in the passbooks later on. Check issue recorded in the passbook later on. Bank charges recorded in the passbook, recorded in the cash book later on. Somebody directly deposited in the bank, not recorded in the cash book. So they're because of timing error. That means they are recorded in both the books at the end of the day. But they're recorded at different point of time. For example, year ending is 31st of March chartered. What is the year ending? 31st of March. I deposited a check on 29th of March. I deposited the check in my bank account on 29th of March. So in my cash book, I debited my cash book on 29th of March only. So my bank balance increased on 29th of March only. So my cash book balance increased on 29th of March. The check got honored in the passbook, and in the passbook it was recorded on 2nd of April. Which date? 2nd of April. I deposited on 29th of March. So I recorded in cash book on 29th of March. Bank recorded on 2nd of April. And in between chartered, there was a year end 31st of March. Because of that year end, cash book balance had increased. Passbook balance had not increased. So there was a difference. Now, what was the reason for difference? What was the reason for difference started over here? Checks deposited, recorded in cash book, not recorded in passbook. Checks deposited, recorded in cash book, not recorded in passbook charter. Am I clear? Yes or no? Yes, sir. That means there are several reasons for differences. A statement disclosing all the reasons for differences is known as bank reconciliation statement. Am I clear? Now, so many things I spoke. So let us write few things down and then move ahead, charter. Bank reconciliation statement. The short form is BRS. Correct. So point number 1, which was important over here, is business records all transactions with bank in a book called cash book. Bank records all transactions with customer in a book called passbook or bank statement. Correct. Now charted. In cash book, you had studied single column cash book, double column cash book, triple column cash book. Yes or no? Cash book, you had studied single column cash book, double column cash book, triple column cash book. Single column cash book, triple column cash book, you have got cash column, bank column, discount column, cash column, bank column, discount column. Charted, remember, we are interested only and only in bank column of the cash book. We are interested only and only in bank column of the cash book. Am I clear? Anything recorded in the cash column, we mean it is not recorded in the cash book. Because whenever we say cash book, we mean bank column only. So if anything is recorded in the cash column of the cash book, it implies that it is not recorded in the cash book. Because for us chartered, cash book means bank column. Please, for heaven's sake, do not forget that. Am I clear? Cash book, bank column only. Now chartered. Second, bank column or passbook is also known as bank statement. Point number 2 chart. Cash book and passbook records transactions on opposite side. For example, this is cash book, this is passbook charter. Now charter. Debit side, credit side, debit side, credit side. Now, over here, receipts, payments. Over here, payments. Over here, receipts. Correct. So remember. So on the debit side, deposits are recorded. Over here, deposits are recorded. Credit side. Over here, checks issued are recorded. Over here, checks issued are recorded on the debit side. So remember, chartered, this is very, very important. What we record on the debit that cash book increases on debit side, decreases on credit side. Passbook decreases on debit side, in correct? Now chartered. So this is how cash book and passbook works on opposite side. Point number 3, chartered. Balances. As you all know, chartered, there are two types of balances. One is known as favorable balance. The other is known as unfavorable or overdraft balance. Favorable balance, overdraft balance. Favorable balance means we have money in the bank. That means deposits are more than the withdrawals. Favorable balance means deposits are more than the withdrawals. I deposited 30, withdrawn less than 30. That means there is money in the bank. If there is money in the bank, it is asset for me because I can withdraw that money at any point of time. If the balance is favorable, that means I can withdraw money from bank at any point of time, and bank has to pay that money to me at any point of time, chartered. That means when I say favorable balance, it is asset for me or asset for business, but liability for bank. So favorable balance, chartered. Favorable balance favorable balances are cash book asset, therefore debit balance, passbook credit balance, because it is asset for me, liability for bank. Overdraft balance is liability for me. Withdrawals are more than deposits. Unfavorable balance means withdrawals are more than deposits. I am supposed to pay bank. Liability for me. Bank is supposed to receive from me. Asset for bank. So cash book, credit balance, passbook, debit balance. Am I clear? Yes, no, yes, sir. No. At year end, bank balance as per cash book may not be equal to bank balance as per passbook. Correct? A statement showing a reason for differences a statement showing reason for differences between these two balances is known as bank reconciliation statement. So bank reconciliation statement basically states the reasons for differences between bank balance as per cash book and bank balance as per passbook. Am I clear? A very noteworthy thing. Now, chartered. Rule to prepare BRS. Now, chartered, BRS, that means bank reconciliation statement. Now, chartered, let's concentrate on the word reconciliation. Suppose I have a fight with my friend. So I need to reconcile with him. To reconcile, what is the easiest method? The person who has done the mistake has to rectify its mistake. Yes or no? Or say sorry for that? A person who has done the mistake has to rectify the mistake or say sorry for that, and the matter is solved. So reconciliation means the book which has made the mistake or not recorded the transaction has to rectify the transaction. Yes or no? So if I put it in simple words, chartered, in reconciliation, there are two rules. Rule number one, record in the book, or rather record in the side in which it is not recorded. Understand this, chartered. Record in the side in which it is not recorded. Which side? That is debit or credit. If the amount is not debited, debited. If the amount is not credited, credited. Record in the side in which is not recorded. Record in the side in which it is not recorded of any book. That means maybe cash book or passbook. So like checks deposited, not recorded in passbook. When you deposit a check, you record it cash book debit, passbook credit. Not recorded in passbook means not credited in passbook, therefore credited. Check issued but not presented. Check issued but not presented. When you issue a check, you record in cash book, credit side, passbook, debit side, yes or no? When you issue a check, you record in cash book, credit side, passbook, debit side, yes or no, sir? So not presented means not recorded in passbook. So passbook, which side you should record? Debit side. So record it on the debit side. Oh, so you are supposed to remember this is very, very important. This table which you are seeing charted is very, very important. This, when I say bank charges not recorded in cash book. So bank charges is payment. Payment is not recorded in cash book. Which side? Credit. So credited. Okay. Direct deposit not recorded in cash book. Direct deposited not recorded in cash book. Deposit will be recorded in cash book with side, debit side. Cash book debit side it is not recorded, therefore recorded. Checks deposited not recorded in passbook. Deposit is recorded in passbook with side, credit side, so credited. So if you know this much charted, which is your class 11th and 12th stuff, you are done. You're just supposed to remember with a cool mind where it should be recorded. Correct? Second, rectify the book. Rectify the book which has made the mistake. Rectify the book which has made the mistake. Simple. Now, point number 6. Now, sometimes I feel some students think in this fashion. Which fashion? That I deposited money into the bank. So for me, money is going in, for bank, money is coming in. No, you're not supposed to think this way. When I say I deposited money, that my bank balance is increasing over. My asset is increasing, passbook's liability is increasing. So when I deposit money, it will come in cash book debit side and passbook credit side. Am I clear? Don't think that when I deposit money, money is going from me and received it by bank. No. When I say money is deposited, what happens to the bank balance? My asset is increasing on the debit side. Bank's liability is increasing on the credit side. This receipt side, payment and receipt, very, very important. Secondly, some important points. A. Anything recorded in passbook after year end means it is not recorded in passbook. Because we are preparing BRS on a particular date. We are preparing BRS as on a particular date, as a statement showing reasons for differences of two balances known as BRS prepared as on a particular date. Am I clear? So BRS is prepared as on a particular date. If anything is recorded in passbook after the year end, that means it is recorded next year. In current year, it is recorded, not recorded. Not recorded. Over. So if I say checks deposited, recorded in passbook next year, that means it is not recorded in passbook. This is very important sentence. Any check which I deposited in the current year but recorded in the passbook next year, that means in current year it is recorded, not recorded, chartered. Not recorded. Because till the end of the year, was it recorded in the passbook? No. Similarly, check issued but presented to bank next year. But presented to bank next year. Current year it is presented, not paid. The period for which I am preparing BRS, is it presented during that period? No. Am I clear? So BRS is prepared as on a particular date. So if anything is recorded before that particular date, fair enough. Anything is recorded after that particular date, that means it is not recorded. B. One minute. Now, chapter. Correct. Point number B. Any transaction recorded in cash column of cash book means it is not recorded in cash book. Why? Because I told you earlier also that by cash book we legitly mean only bank column. Am I clear? By cash book we mean only bank column. So anything recorded in the cash book on the debit side, in the cash book, but in the cash column we are not interested, because in the bank column it is not recorded. Interest allowed, interest charged. Interest allowed is income charted. Interest allowed is expense. Point number D. Point number D. Undercast. In case of undercast, in case of overcast. In case of undercast, record on same side. If credit side is undercast, record on the credit side. Credit side undercast means credit side I was supposed to record 5. Credit side I was supposed to record 5, but I have recorded 4. I was supposed to record 5, but I have recorded 4. So one I will record which side? Credit. Credit side I was supposed to record 4, but I have recorded 2. Credit side I was supposed to record 4, but I have recorded 2. So record 2 on the credit side only. Credit side I was supposed to record 4, but I recorded 5. Then record 1 on the debit side. Yes. So in case of overcast, record on the opposite side. I repeat, in credit side I was supposed to record 4. I recorded 5 on the credit side. That means 1 extra I have recorded on the credit side. So record 1 on the debit side. So in case of undercast, record on the same side. In case of overcast, record on opposite side. Am I clear? Yes. Now, question remaining silent. Overcast and undercast is always of favorable side. Question remaining silent. Question remaining silent means QRS. Question remaining silent. But only it is stated 200 overcast, 300 undercast. Then overcast and undercast of which side? Favorable side. What is favorable side, chat? What do we understand by the term favorable side? Favorable side means cash book debit side or passbook credit side is a favorable side. Am I clear, charter? Yes. Bill sent for collection means check deposited. Correct? F. Now, chartered. Is this clear? Now. Bills discounted. Bills discounted. Money received is equal to bill value minus discounting charges. Correct? Money received minus bill value, money received is equal to bill value minus discounting charges, what we call it, proceeds. Bills discounted dishonored. Bill discounted dishonored. Bill discounted dishonored. Money paid is equal to bill value plus noting charges. Am I clear? Money paid. Money paid will always be recorded in passbook and not recorded in cash book credit side, because bills discounted dishonored. You are supposed to pay money. How much you are supposed to pay? Bill value plus noting charges. It will always be recorded in the passbook debit side. Cash book credit side, it will never be recorded. So you are supposed to record in cash book credit side. Correct? What value? Bill value plus noting charges. Am I clear, chartered? So this is your overall thing. So if I again come back to chartered, what is the rule to prepare BRS? This is very, very important, chartered. This is very important. First, record in the side in which it is not recorded and rectify the book which has made the mistake. Side means it can be debit, it can be credit. Am I clear? Yes, sir. Now, chartered. Let's solve question. There are two methods. Is debit credit, one is addless. I will show you both. Those who have done addless in their life like this, they have got four varieties of question: cash book debit, cash book overdraft, passbook credit, overdraft, passbook favorable. Over here, there is no variety at all. There is only one variety, BRS. That's it. Now, chartered. Let's read the question first. Can you see this question? It is on page number 8. Question number 9. Correct? Now, chartered. Let's start. The cash book of Messrs. A, B, C shows 27,570 as balance at the bank as on 31st of March 2017. So year end is 31st of March 2017. Correct? Now chartered, one thing I need to tell you that this balances. If nothing is mentioned, assume this. It's a favorable balance. If nothing is mentioned in the question, the balance is always favorable. So this balance is which balance? Cash book debit. Correct? Yeah. Subsidy. Subsidy means what? Income or expense? Income. Received from the government directly by the bank. Received from the government directly by bank. But not advised to company. Not advised to company means not recorded in cash book. Directly paid. So this is an income which is recorded in the passbook, not recorded in the cash book. Yes or no? Income is recorded in cash book with side. Income is income will be recorded in cash book debit side. Exactly. Record in the side in which it is not recorded. So you will record 10,000 250 10,250 on debit side. Yes, sir. Sir, how will present? Relax. On 15th of March, the payment side of cash book. Which side of the cash book? Payment side of the cash book. Cash book payment side is which side? Undercast. So on the credit side, we had written 350 less. So in case of undercast, write on the same side. So what you will write? 350 on which side? Credit side. Because payment side is credit side is undercast on the credit side. Credit side, you recorded 350 less charted. Therefore, on credit side, record 350. Simple. Yes or no? Yes. On 20th of March 2017, debit balance of 2156. Debit balance of 2156 on the previous day was brought forward as credit balance. That means I should have recorded 2156 on debit side, but I recorded 2156 on credit side. Listen to this very, very carefully. 2156 I should have recorded on debit side, but I recorded 2156 on credit side. Before that, G. If rupees X is not recorded on debit side or credit side, then rupees X on debit side or credit side. But if rupees X is rupees X recorded, rupees X is recorded on wrong side, then record rupees 2x on correct side. So understand this very, very carefully, chapter. If rupees x is not recorded, then you record it. So amount will not become double. It will be same. But if x is recorded on wrong side, that means I was supposed to record on debit side. I was supposed to record rupees 2 on debit, but wrongly recorded credited 2. That means there are two errors. I did not record on the debit side, plus I wrongly recorded on the credit side. So I have to remove from credit, debit 2, plus record again on the debit side 2, that means debit 4. So slowly. Okay, slowly, chat. Slowly. 9.1. If an amount is not recorded on the debit side, record that amount. If 100 rupees is not recorded on the debit side, please record 100 rupees on the debit side. If 100 rupees is not recorded on the credit side, please record 100 rupees on credit side. But if 100 rupees instead of recording on debit side, you have recorded on credit side, opposite side, wrong side. So instead of debiting 100, if you have credited 100, instead of debiting 100, you have credited 100, then you will debit 200. Am I clear? Yes or no? Yes, sir. That means, why? Because instead of debiting 200, you credited 200. There are two errors. You did not debit 100, therefore debit 100. You wrongly credited 100, therefore again debit 100. So debit 100 twice, therefore debit 200. Same thing is over here, charter. On 20th of March 2017, debit balance of 2156, debit balance on the previous day was brought forward as credit balance. That means you were supposed to write 2156 on the debit side. Did you write? No. So write. Plus you wrote wrongly 2156 on the credit side. That is incorrect. So again write 2156 on the debit side. So debit side you are supposed to write 2156 two times. That means you are supposed to write on debit double the amount, 2156 into 2. Debit 431. Am I clear? This is very important. Instead of debit, you wrote it on credit. But if you did not record on debit, because a lot of students have asked me so many times that, sir, when to write the same amount, when to write double the amount. If it is recorded on opposite side, then you are only supposed to double the amount. If it is not recorded, then you are supposed to write the single amount. Over here, it is recorded on the opposite side, therefore double the amount. Thereafter, chat. A customer gives us money or we pay customer? Sir, customer will give us money. Receive from customer, chatted. Very good. Customer ABC received a cash discount of 5%. Received a cash discount of 5%. This is chartered discount allowed of 5% on account of 2000. That is 100 rupees. A customer who received a cash discount, that means customer received a discount. We allowed the discount because customer was paying money. We gave discount, he received discount. So customer of ABC who received a cash discount. That means customer received a cash discount. We allowed customer. So he was supposed to give us 2,000. We gave him 100 rupees discount. So he gave us how much? He gave us how much? 1,900. So logically chartered, if you ask me logically, then in cash book chartered, suppose this is your cash book. Correct? There is cash column, there is bank column, there is discount allowed, there is cash column, there is bank column, and there is discount received. Correct? Now chartered. Correct should have been to customer 1,900 and 100. I should have recorded like this. But what did I do? It is given. A customer ABC, a customer of ABC who received a cash discount of 5% on his account of rupees 2,000 paid to ABC. Customer paid to ABC. That means ABC received money. A check on 24th of March. The cashier erroneously by mistake entered the gross amount in the cash book. Erroneously means by mistake recorded the gross amount in the cash book chartered. That means what mistake did he make? He wrote wrong he wrote to customer 2,000. That means chartered, can I say instead of 1,900 on the debit side, he recorded how much? 2,000. Therefore, to rectify, I have to write by customer 100. Yes or no? Yes, sir. This is rectification. So rectification, what I have to do? Credit 100. Yes, sir. No, sir. Yes, sir. So simple. This you understood. I received 1,900, but in the bank column I recorded 2,000. Cash book instead of 1,900, I recorded 2,000. So debit side of the cash book I recorded 100 extra. Therefore, I need to credit 100. Am I clear? I repeat. Debit side of the cash book, instead of writing 1,900, I wrote the gross amount, that is 2,000. That means I recorded rupees 100 extra on the debit side. To rectify, I will credit it. Correct, chartered? So over here, it will be credit 100. Thereafter, number 5. On 10th of March 2017, a bill of rupees 5,700 was discounted. Cash book entered in the cash book, but the proceeds credited in the bank is only 5,500. First of all, what is the bill? 5,700, which you discounted. Proceeds means what? Money received. So bill was 5,700. Bank gave you how much? 5,500. Hey, why, sir? Bill value is 5,700. Why will bank give 5,500 only? Arey nalaya. If bill value is 5,700 and they are giving you 5,500, that means 200 is discounting charges. Correct, incorrect? Correct. Now, it means cash book. This is receipt of money, payment of money. So this is a receipt of money. How much did I receive? Sir, 5,500. Passbook should record receipt on which side? Sir, credit side. So passbook has credited only. Passbook credited in bank statement amounted to rupees 5,500 only. So passbook has correctly credited 5,500, but we, cash book, cashier recorded how much? Cashier recorded 5,500. 5,700 was entered in cash book. Oh, cash book, how much should have been entered? Sir, 5,500. But how much is entered? 5,700. How much extra is entered? Sir, 200. Which side 200 extra is entered? Sir, this is money received. Money received is recorded in cash book debit side. That means this 200 is extra recorded in cash book debit side. Exactly. So what we should do? Sir, credit 200. Exactly. Credit. Otherwise, explain like yours. Suppose this is your cash book. I should have recorded two bills receivable 5,500. This is correct. But wrongly I recorded 2 BR 5,700. That means chartered, if you can see on debit side I recorded extra. Yes. Therefore, to rectify, I have to write by BR 200. That would be my rectification. Are you understanding? So instead of 5,500, I recorded 5,700 on the debit side. To rectify, I credit it. Correct? Yes, sir. So you're doing rectification or BRS? Rectification. No, BRS. Now chartered. Check issued. Check issued will come in cash book which side? So check issued is payment. Payment will come in cash book credit side. Therefore, passbook debit side. Check issued cash book credit, passbook debit. Amounting to 1725. Returned. Out of date. No entry in cash book. Okay. Returned means dishonored. Yes. So when you issue a check, it will come in cash book credit side. It went to the passbook. Passbook may got dishonored. Came back to you. Yes. So the check issued is dishonored. Which side you should record? Debit side. Did you record? No. How did you come to know? No entry has been made. So check issued 1725 is recorded in cash book credit side. It is dishonored. So it should be recorded in cash book debit side, but I did not record. So record debit 1725. Correct? Yes, sir. Check issued should be recorded in cash book credit side, but by mistake, I have recorded on the credit side. It got dishonored, so it should come again on the debit side. Entry for dishonor is not made. No entry made in cash book. Now, thereafter, insurance premium expense. Directly paid by bank, understanding instruction, no entry made. Insurance premium paid. So paid is expenditure. Expenditure can no entry in cash book. Yes. Expense means payment. Payment can no entry in cash book. Which side it should come? Bills receivable for 1,500 discounted for 1,000 has been dishonored. Bills discounted, dishonored. Money paid will be bill value plus noting charges will always be recorded in passbook, will not be recorded in cash book credit. So you're supposed to record this in cash book credit. A bill receivable of 1,530 discounted for 1,500 with bank has been dishonored on 30th of, but the advice was not received. Advice was not received means not recorded in cash book. So what will you do? Credit 1,500 plus noting charges. Sorry, 1,530 plus noting charges. Charges is not there. So you credit only 1,530. This is a payment. So 30 rupees 1,530 discounted. That is discounting charges chartered. Don't get confused. I was to pay bank 1,530. Bill value was how much? Bill value was 1,530. When I discounted 30 rupees discounting charges, I got 1,500. 1,530 bill. When I discounted the bill, 30 rupees discounting charges, I got 1,500. On the due date, I am supposed to pay bank out 1,530 plus noting charges. Noting charges is not given. So how much I am supposed to pay? 1,530. Did I pay? Yes. Is it recorded in bank? Yes. Is it recorded in cash book? No. So it's a payment not recorded in cash book. It's a payment not recorded in cash book. Am I here? No. Bank recorded a cash deposit of 1,550 as 1,505. Now tell me, bank has recorded a deposit of 1,550 as 1,505. That means 45 rupees. The difference is 45 rupees. Sir, how 45? 1,550 minus 1,505 is equal to 45. Yes. 45 rupees difference chartered. I have deposited 1,550, but I have recorded only 1,505. That means I have recorded less deposit in my passbook. How do you know passbook? Bank recorded. Bank recorded a cash deposit as 1,505. Now tell me, cash deposit is recorded which side? Credit side. Therefore, on the credit side, you were supposed to record 1,550, but you recorded 1,505. That means you recorded 45 less on the credit side, so record 45. Correct? Shall we start? Yes, sir. Now, chartered. Solution number 9. Page number 8. Cash book debit balance. How much? 27. This is my starting point. So whatever you will be debiting, that is added. Whatever you are crediting will be subtracted by default. First one is 10,250 credit. That is, sorry, 10,250 debit. subsidy recorded in cash book. Correct? Yes, sir. Then second is 350 credit under cost of cash book payment side, that is credit side. How much? 350. Thereafter, debit balance wrongly recorded on credit side. Three one discount allowed wrong recorded in cash book debit side. So 100 will be credited. Thereafter, number 5, 200 is credited, that is discounted. Does receivable discounted wrongly recorded in cash. Correct? Check issued amounting to 1725 marked out of order. Check issued dishonored. Check issued dishonored. Wrong. Check issued dishonored. No entry. This is debit and credit of which? This is debit and credit of both cash book and passbook. Correct? Record in the side in which it is not recorded. This is cash book debit, passbook credit. Which side? This is both cash book and passbook charter. Am I clear? Yes. Thereafter, insurance premium, no entry, cash. Insurance premium paid in cash flow. How much? 756. Thereafter, bills receivable discounted, dishonored, not recorded in cash flow. 1530. Correct? Cash deposited. Cash deposited under stated in passbook 41st. Now, chartered. One minute. One minute, chartered. Yeah. So you can see debit balance. Debit balance is 43876 and credit balance is 2981. Generally, the way you balance your ledger account, so as per passbook. 3857 minus 2981 you do chart it 76 less form. Then since you started with debit chartered, you started with debit, then all debit will be add, all credit will be subtract. If you would have started Now, so balance as per passbook 40876 was what I was telling. If you want to follow addless method, then what? Since you started with a debit balance, whatever is debited will be added, whatever is credited will be subtracted. And if you had started with credit balance, whatever is credited will be added, whatever is debited will be subtracted. Chartered. Am I clear? Yes or no? Yes, sir. Now, sure. Now, chartered. One important point that regards BRS. Now, that is amended cash book. Amended cash book. In that first prepare cash book with those transactions which are not recorded in cash book and find closing balance of cash book. That means we amend the cash book first charted. We amend the cash book first charted. Whatever there are errors in cash book, we first rectify them. Thereafter, second. So cash book, there are two types of transaction, either not recorded in cash book or not recorded in passbook. There are only two types of transaction, either not recorded in cash book or not recorded in passbook. Those transactions which are not recorded in cash book, you put them in amended cash book. And those transactions which are not recorded in passbook, you put them in BRS. I repeat, there are only two types of not recorded in cash book, not recorded in passbook. Those transactions which are not recorded in cash book, you put them in amended cash book. Find out the bank balance. And those transactions which are not recorded in passbook, you put them in prepare transactions not recorded in amended cash book, and the transactions which are not recorded in passbook will go in BRS. So transactions are bifurcated into two buckets. Cash book mistakes in cash book, find out the cash book balance. With that balance, prepare BRS. And in BRS, only those transactions will come which are not recorded in passbook. So which are not recorded in cash book will find in amended cash book, and which are not recorded in passbook will find in BRS. BRS is prepared with the help of closing balances of amended cash book. And we take a break of 10 minutes and then we come back for final accounts charter. Am I clear? Thank you so much. Hello, Charters. Hello, Charters. Welcome back for a new chapter of final accounts. Chartered final accounts. A very important chapter, but easy chapter. And you'll have done this chapter earlier also. So there is nothing very important, nothing very difficult for you to study. Now, final accounts. During the entire year, we go on passing the journal entries, prepare the ledger account, passing the journal entries, prepare the ledger accounts. At the end of the year, we close the ledger accounts, find out its closing balance. At the end of the year, we close all the ledger accounts, find out its closing balance, and those closing balance, we put it in a statement known as trial balance. Then from the trial balance, we prepare final accounts. That is trading account, P&L account, and gross profit. So in final accounts, trial balance is given to us. Am I clear? We are supposed to prepare trading account, PL account, and adjustment. Trading account, PL account, and balance sheet. So chartered, what is final accounts? Final accounts is nothing but an accounts prepared at the end of the year, which gives us the financial performance of the organization and financial position of the organization. Or we can say accounts prepared at the end of the year to give us the profit and the financial position at the end of the year. Profit is found out from P&L account and financial position is found out from balance sheet. So basically what is given in the question. So let us write down point number 1. Given in the question. A. Trial balance. B. Adjustments. Correct? What we are supposed to prepare. We are supposed to prepare A. Trading account. It gives us gross profit. The SPY symbol stands for profit. And B. P&L account, which gives us net profit. And thereafter we are supposed to prepare balance sheet. Correct? Now chartered. Three. Rules of posting items of Trial balance. Now, trial balance has debit items as well as credit items, correct? Items on the debit side, items on the credit side. All debit side items. First point is, items of trial balance will be posted once, correct? Items of trial balance will be posted once. Debit items will be posted on or PL debit or asset. Debit items of trial balance will be posted in trading debit, PL debit or balance sheet asset. A debit item cannot come in credit side, exception to the rule. Except A, drawings, which is not posted on the debit side, but less from capital in balance sheet liability side. Second is sales return, correct? Sales return will be, it is on the debit side, but it will be less from sales in trading credit. Drawings less from capital and balance sheet liability, sales return less from sales in trading credit. Am I clear, chartered? Yes, no, yes, sir. Now, chartered. So, although they are not coming on the debit side, they are subtracted from the credit side. That means impact remaining debit only. Either you write it on the debit side or you subtract it from the credit side, impact remains the same. Third, credit items of trial balance will be posted on trading debit, sorry, trading credit or PL credit or balance sheet liability. That means credit items of trial balance will come in credit, trading credit, PL credit or balance sheet liability only, chartered. Am I clear? Yes, sir. Exception to this rule. Except purchase return, that will be less from purchases in trading debit. Purchase return comes in trial balance credit side, but it will be subtracted from trading. So it will be subtracted from purchases in trading debit. So these are the basic rules of trial balance chartered. Am I clear? Yes or no? Yes, sir. Now chartered, as you all know, trading account records all direct expenses, P&L account records all indirect expenses. Direct expenses means expenses related to factory and production. Expenses related to factory and production. Expenses related to purchase of goods. Am I clear? Now, this is a very common doubt which I get, so I'm writing it over here. Trading expense or trade expenses will be posted in P&L account. Usually this is a very clear doubt. People think that trade expenses will come in trading. No, trade means sales. These are selling expenses. The word trade means sales. These are selling expenses which will come in PL. So trading expenses or trade expenses does not come in trading account. It comes in P&L account chartered. Am I clear? Yes, sir. Thereafter. Now chartered, apart from this, so this is your trial balance ka posting chartered. Trading account में opening stock, closing stock, purchase, less purchase return, sales, less sales return, all direct expenses. Direct expenses means expenses related to purchase of goods, production and factory expenses. Am I clear? And rest, all other office, admin, selling and distribution expenses, all other income will come in P&L account. Only one income comes in trading account, that is sales. Rest, all other income are non-operating or indirect income, which comes in P&L account. Am I clear? Yes. Now chartered, apart from this, point number 4 is important adjustments. Important adjustments. Let's go through those adjustments very fast, chartered. So I hope you can see on your screen the adjustments. Adjustments are changes to be made in books of accounts to bring all items in books of accounts as per accounting principle, concepts and conventions. Since these items were either not recorded in books of accounts or were not adjusted in books of accounts or wrongly recorded in books of accounts. So it includes rectification of errors also, chartered. Now, let's start with the first adjustment, closing stock. As I told you, items of trial balance will come once only. So if closing stock is appearing in trial balance, it will come only in balance sheet. If closing stock closing stock is the first adjustment. If closing stock is appearing in the trial balance chartered, it will come only in balance sheet asset. If it is not appearing, in trial balance, it will appear in trading credit as well as balance sheet asset. This everybody knows. Very simple adjustment. Yes, sir. Prepaid expenses. Prepaid expenses started if appearing in trial balance. It will be posted once only, so it will be posted only in balance sheet asset. Remember, it will not be subtracted from expenses which you generally do it. If it is not appearing in trial balance, prepaid expenses. If it is not appearing in trial balance charted, then it will come in balance sheet asset and less from expenses. If it is not appearing in trial balance, if it is appearing in adjustment, then less from expenses and balance sheet asset. Note, prepaid expenses is also known as unexpired expense, carry forward of expense, or advance expense. These are different names of prepaid expenses charted. Outstanding expense. If it is appearing in trial balance, what is outstanding expenses? Expenses payable, yet to be paid. If it is appearing in trial balance, it will come only in balance sheet at liability. Items of trial balance will be posted once. If it is not appearing in trial balance, then add it to expense and balance sheet liability. Correct? Yes, sir. Outstanding expenses are also known as expenses in arrear, unpaid expense, expenses due, expenses payable. These are different names of outstanding expense charted. Accrued income. What is accrued income? Accrued income means income receivable. Income earned but not received. Income earned but not received, it is an asset. So if it is appearing in trial balance, it will come only in balance sheet asset. If it is not appearing in trial balance, if it is appearing in adjustment, it will come in balance sheet asset and add it to income. So either add it to income and balance sheet assets. Correct? Thereafter, pre-received income, income received in advance. Pre-received income means income received in advance charted. That means any income which we have received in advance is a liability for us. So if it is appearing in balance sheet, if it is appearing in trial balance, then it should come in balance sheet liability only. If it is not appearing in trial balance, if it is not appearing in trial balance, it will less from income and balance sheet liability. Less from income and balance sheet liability. Pre-received income, it is not current year's income. It is not current year's income. So we remove from income. We have received next year's income in current year. We have received next year's income in current year. Therefore, that is a liability for us. It means income received in advance. It is also known as unearned income. So I hope these are clear. First was closing stock. Trial balance, only balance sheet. Adjustment, trading credit, balance sheet asset. Prepaid expenses. Trial balance, only balance sheet asset. Not appearing in trial balance, balance sheet asset and less from expenses. It is also known as unexpired expense, carry forward of expense or advance expense. Outstanding expense, appearing in trial balance, only in balance sheet liability, not appearing in trial balance. Add to expense and balance sheet liability. Different names. Accrued income, income earned but not received. This year we have earned, but we have still not received. It is an asset. So appearing in trial balance, only balance sheet asset. If it is not appearing in trial balance, add it to income and balance sheet asset. Pre-received income, income received in advance. Next year's income received in current year, that is liability. So if it is appearing in trial balance, only balance sheet liability. If not appearing in trial balance, less from income and balance sheet liability. Depreciation, if appearing in trial balance, only PL debit. If not appearing in trial balance, then depreciation will go in PL debit. Either it will be subtracted from asset or it will be added to provision for depreciation. If provision for depreciation is given, which is generally not given. Note, provision for depreciation will be subtracted from balance sheet from asset in balance sheet. If there is provision for depreciation and depreciation is under SLR, amount of depreciation is equal to depreciation percentage into cost under reducing balance method. For example, suppose plant and machinery is 1000, cost, provision for depreciation 400. That means written down value is how much? 600. Original cost 1000. Provision for depreciation 400. Original cost 1000. Provision for depreciation 400. Therefore, WDV is equal to 1000 minus 400, that is 600. 10% on reducing balance method. Therefore, 10% will be calculated on 600, that is 60. So in PL account, you will write it on debit side to depreciation. And in balance sheet, you will write depreciation less provision for depreciation. 400 was there, add 60, total becomes 460. This is very important. You can either click a pic or pause the video and write it chat. So this is live going. Can we pause? Yeah, you can. Correct? Or after the video gets over, you go to the desired places and copy this. Interest on capital. If it is given in trial balance, it is an expense for the firm. So PL debit, not appearing in trial balance. Interest on capital will come in PL debit and it will be added to capital. Interest on drawings, it is an income. So appearing in trial balance, only PL credit, not appearing in trial balance. Less from capital and PL credit. So this is your interest on capital and interest on drawings. I hope chartered you would have understood depreciation. If it is given in trial balance, then only PL debit. If it is given in trial, if it is not given in trial balance, obviously PL debit, then you will either subtract from the asset or you will add it to provision. But the total provision will be subtracted from asset only, as you can see here. Okay. Don't write provision for depreciation on the liability side. Provision for depreciation is not liability. Why? Because liability means obligation, amount payable. Provision for depreciation is not amount payable. It is reduction in asset chartered. Am I clear? Yes or no? Yes, sir. So there was your interest on capital. Thereafter, loss of goods. If there is normal loss, no entry. If there is abnormal loss, this everybody knows, but still I write it. If there is abnormal loss, suppose goods destroyed by fire, 10,000. Insurance claim, 8,000. Then chartered. This is your trading account. This is your PL account. This is your balance sheet. Trading account, PL account, balance sheet. In trading account, you will write by abnormal loss 10,000. Sir, yes sir, we have studied that abnormal loss should be subtracted from purchases. Yes, chartered. No problem. Whether you subtract from purchase on the debit side or you write it on credit side, it's one and the same only, no? Sir, why do you write it on the credit side? Because it is outflow of goods. Trading account में debit side, inflow of goods. Credit side, outflow of goods. So abnormal loss 10,000. Either you subtract it from, either you write it on credit side, or you write to purchase में से less करेगा. Same thing. From purchase you subtract. Insurance claim is how much? 8,000. The actual abnormal loss is how much? 2,000. How did you get 2,000? 10 minus 8. Correct. And balance sheet may you write insurance claim. How much? 8,000. Now understand this thing. This is also very important. Insurance or insurance premium comes in P&L debit. This is expense. Excuse me. Only insurance or insurance premium will come in P&L debit. But insurance claim will come in balance sheet asset because that is receivable from insurance company. Correct? So insurance or insurance premium, if given in trial balance, that will not come in balance sheet asset. That is expense, will come in PL debit. But insurance claim, if it is given, then it will come in balance sheet asset because that is receivable. Okay. So there is a difference between premium. There is a difference between premium and claim. Okay. Insurance, only insurance means insurance premium. Am I clear, chartered? Yes, sir. Thereafter. So this is your abnormal loss. Example, same example I have given. So not to worry. On 31st of March 19. 10% loan on 1/7/18. 1/7/18 to 31st March 19, 9 months. How many months? 9 months. If I have taken a loan, because it is appearing on the credit side, therefore it's a liability. I have taken a loan. IOL, interest on loan. How much it is? 3,000. That means 3,000 interest I have paid a chapter. Correct? Now let me check how much interest I was supposed to pay. Total interest on loan, total 3,000 into 10% into 9/12. So 3,750 I was supposed to pay. Correct? 3,750 I was supposed to pay. But interest on loan paid as per trial balance is how much? 3,000. That means 750 is outstanding. So P&L may write 3,000 plus 750 outstanding. Now charted. Sorry for inconvenience caused because of internet issues. Now, in case of interest on investment, we apply same logic as interest on loan. But interest on investment is income. So this is very, very important. Correct? Yes. So whenever interest on loan or interest on investment is given with rate of interest, please check whether there is outstanding or prepaid the way we did over here. Okay, sir. You're supposed to check whether there is outstanding or prepaid. And interest on investment, we apply the same logic. But interest on investment is income. Contra item. If debtor and creditor is the same person, then set off the lower of the amount by passing the following journal. That means Ram, suppose it is or you do not have, if you want, you can take a pic of this and then I'll explain you. If Ram is a debtor of 2000, creditor of 3000, then lower figure is how much? 2000. That means less 2000 from debtor and creditor. Correct? Why? Because if 2000 is receivable, 3000 is payable, ultimately 1000 is payable, 2000 receivable, 3000 payable. That means ultimately we are supposed to pay 1000. So receivable was 2. Receivable was 2. Payable was 3. Ultimately you will say 2 will become 0 and this 3 will become 1. That means, don't you think 2000 you have subtracted both from debtor as well as creditor, because this 2000 has become how much? 0. So you have subtracted 2000 from debtors and this 3000 has become 1000. That means 2000 you have subtracted from creditor also. So lower of the amount should be subtracted from both debtor as well as creditor chartered. Am I clear? Yes. Now chartered provision for doubtful debts. Understand this very carefully. For provision for doubtful debts, which is also known as PDD. Working note number 1, you always prepare schedule of debtors. That is as per trial balance, okay, less or add any adjustment, okay, if there are adjustments related to debtors. Thereafter, less bad debt, less bad debt of less bad debt only if in adjustment. Why only if in adjustment? Because trial balance wala bad debt, the bad debt which is appearing in the trial balance is already subtracted from debtors. Bad debt which is appearing in trial balance is already subtracted from debtors. Okay. A. Less provision for doubtful debts. Percentage of A. This is B. This is also known as new provision. Okay. This is also known as new provision. Correct? Yes. Less provision for discount allowed. This is transfer to balance sheet asset. This was your working note number 1. Working note number 2 charted. That is provision for doubtful debts. This also you will prepare in the working note by BD. Always you will prepare by BD. This is of trial balance. If it is given, very good. If it is not given, 0. Listen to me very carefully. If it is given, very good. If it is not given, 0. Okay. Thereafter, to bad debt. To bad debt means trial balance plus adjustment, total bad debt, because this provision is not created only of trial balance or only of adjustment, total bad debt. So whatever bad debt is given in the trial balance and given in adjustment, entire. If no bad debts are given, then 0. Okay. Then to balance carried down. Suppose let me call it A, let me call it B. To balance, or you might get confused. Let me call it alpha, beta, gamma. This is new provision. New PDD. From where did I get new PDD? This one. Okay. By PF. This is your balancing figure. This will go in PL debt. If any of alpha, beta, or gamma is missing, assume 0. Don't have to think too much because this is, we don't have too much of time to spend on this, but I can tell you this is just, always prepare PDD account in the working note. Always follow this. This is known as old PDD. This is new PDD. This is bad debt. So what you used to do? New PDD, add bad debt, less old PDD. This used to give us this figure. If any alpha, beta, or gamma is missing, assume 0. So if only there is new PDD and these two are not there, then what we'll have? Whatever is new PDD, that okay. Suppose only alpha is there and these two are not there, then you'll have 2 PL. If only old PDD is there and there is nothing else, then instead of by PL, you will have PL. Correct? I hope you are understanding. If these two are not there, only this is there, then you'll have 2 PL. Correct. Now, chartered. So this is a provision for doubtful, nothing new. Now, one more adjustment. Manager's commission charter. Manager's commission. If X%, then X by 100 into net profit, that is credit item of PL minus debit item of PL. Correct? If X% after charging such commission, then commission is equal to X by 100 plus X into net profit. And net profit means same. Same net profit. So write like this. Now understand. If X% of net profit after charging such commission, then it will become X, then it will become commission is equal to, then it will become commission is equal to X by 100 into net profit after charging such commission. Net profit after charging such commission is nothing but net profit minus commission. Yes. Net profit after charging such commission is net profit minus commission. Yes. Now, apply maths. 100 commission is equal to X net profit minus X commission. Yes. 100 commission plus X commission is equal to X net profit. Yes. Take commission common. 100 plus X is equal to X net profit. Yes. Therefore, commission is equal to X by 100 plus X net profit. Okay. Understood? Yes, sir. Now charted, so we are done with all the adjustments. Okay, this is the format. Now, before going, let's solve one question on final accounts, which is there on page number 11. Page number 11, this is page number 8, page number 9, page number 9, page number 10, and page number 11. Correct? Following is the trial balance as on 31st of March 2018. So I hope you would have understood all the adjustments as discussed in final accounts charter. Am I clear? Now, capital, that will come in liability, drawings, less from capital, yes, fixed asset, this is added to fixed asset, opening stock, trading debit, purchases, trading debit, purchase return. 4M means from purchases, sales, trading, credits, return, less from sales, debtors will come in asset, creditors, liability, expenses, PL debit, fixed deposit, asset, interest on fixed deposit, PL credit, income, cash asset, suspense is drama. It is on the credit side. Depreciation, it is given in trial balance. If depreciation is given in trial balance, it will come in PL debit only. It will not be subtracted from the asset. So can you see fixed asset opening 1,40,000? Yes, on that this is 14%, and purchases is how much? 2 lakh. Purchases 2 lakh on 110. Therefore, depreciation will be for how many months? 6 months. October, November, December, January, February, March. 6 months depreciation will be how much? On 2 lakh, 10,000. You know. Now, rent for 17 months up to 31st August is 17,000. 17 months, 17,000. Therefore, 5 months prepaid is equal to 5,000. 17 months, 17,000. Therefore, 5 months is equal to 5,000. Investment, 12%. Okay. Closing stock, 12%, 1/8. So, August, September, October, November, December, January, February, March. 8 months interest. You're supposed to calculate. So 8 months interest will come how much? $250,000 into 12% into 8 divided by 12. Correct? Yes. A scrutiny of the books revealed the following. Rupees 20,000 drawn from the bank was debited to drawings account. Okay. But out of this amount withdrawn was only rupees 12,000 was used in the business for day-to-day expenses. Okay, that means drawings. Now see charter. Solution to question number 60. Correct entry, wrong entry, reverse of wrong entry, rectified entry. Correct entry should have been drawing 8,000, because out of 20,000, 12,000 is for expenses. The drawing is only 8,000. expenses should be how much? 12,000 to cash 20,000. This should have been the correct entry. I have withdrawn 20, but 8 is drawings and 12 is for expenses. But what wrongly I did? Drawings 20 to cash 20. This is what I did. This is correct or incorrect? Incorrect, pa. Entire 20,000 I debited to drawings. The reverse of wrong entry. Cash 20 to drawings 20. Now you combine these two entries. Cash will get nullified. Expenses debit 12. And drawings over here is debited with 8 and drawings over here is credited with 20. So debit, credit, subtract, and there would be credit drawings. Now understand this very nice. This will be less from drawings. And this will be add to expense. Expense to drawings. Correct? I should have debited drawings 8, expenses 12, but I have debited entire 20 to drawings. So I have debited drawings 12,000 extra. Therefore, I credited drawings by 12. I should have debited drawings only 8, but I have debited 20. Therefore, I have debited drawings by 12. Therefore, credit drawings by 12. And I did not debit expense. Therefore, I debited it. So we'll add to expense and less from drawings. Okay? Yes, sir. No. So the journal entry for this is drawings to, sorry. Expense to drawings 12. Purchase goods worth rupees 16,000 was not recorded in the books of account up to 31st of March. The goods were included in the stock. So it will become purchase to creditors 60. That means add to purchases 6 add and creditors 16. This is add to expense and less from drawings. DR is drawings, not debit. Purchase of rupees 1,000 was recorded in the sales journal and the amount was correctly posted to the party's account. Purchase return of 1,000. Now charted look. Purchase return का journal entries party to purchase return 1,000. Correct? Party to purchase return 1,000. Now charted. What I did, I wrote party debit correctly. But instead of crediting sales purchase return, I recorded in sales return, and sales return is debited or credited? Debited. So I wrote party debit, sales return debit. Since I recorded the transaction in sales return journal, sales return journal may sales return is debited. In sales return journal, sales return is debited. So party was correct. But instead of crediting, instead of writing in purchase return, I wrote in sales return, and sales return is debited. Pa. Am I clear? Yes. So reverse of wrong entry. To sales return, to party. Correct? Yes. Therefore, chartered, if you combine these two, party will cancel. To purchase return, 1000. To sales return, 1000. To suspense, 2000. Therefore, chartered, can you see suspense is debited? Yes. Purchase return is credited? Yes. Purchase return may add. Sales return may subtract. Because sales return is a debit item. If you credit, it will decrease. Sales return is a credit item. Sorry, sales return is a debit item. If you credit, it will decrease. Am I clear, chartered? Yes or no? Yes, sir. Purchase return will increase. So instead of purchase, you are recorded in sales return. So remove from sales return, add to purchase return and suspense debit. Oh, sales return will decrease. Purchase return will increase. Correct? No. Now, so over here, journal entry, I wrote it. Suspense 2. Purchase return 1000. Sales return 1000. And one more thing. See chartered, purchase return is debited over here. And in trial balance, purchase return was on which side? Sir, purchase return was on credit side. Purchase return was on credit side, and over here debited, therefore it will get nullified. Expenses in respect of rupees 6,000 period after, that is prepaid. That means general expenses will become prepaid expense to expense 6,000. So these are all the adjustments which I have written. After that, it is given, give necessary journal entries in respect to 1 to 4 above, which I have given. We're supposed to write it in fair 1, 2, 3, 4. These are the journal entries. Expense to drawings, purchase to creditors, suspense to purchase return to sales return, prepaid expense to expense, and prepare final accounts. Now, let's prepare final accounts. So, now this is the format. Correct? Now let's start. First is what? Capital. Capital is how much? 6 lakhs. Thereafter, drawings. Drawings is 70 minus 12. Drawings is 70 minus 12, that is 58 chapter. Thereafter, fixed assets. Okay, fixed assets. 1,40,000. Purchase of fixed asset. Addition. This is how much? 2 lakh. Depreciation chartered given in the trial balance is how much? 14,000 plus new depreciation of 10,000. So from where you got new depreciation? Now chartered, it is again depreciation is to be provided. Depreciation is to be provided at the rate of 10% per annum purchased during the year. See, 1/8 it was purchased. So 6 months depreciation is 10,000. 24,000 total debt. 24. So 340. 3,40,000 minus 24 is equal to chartered. Sorry. This 14 will not subtract because that is already given in trial balance. So we are supposed to subtract only 10,000. Depreciation given in trial balance is 14. That we are not supposed to. If depreciation is given in trial balance, it will come only in PL debit. So this will become 3,30,000. Correct? Yes. This is trading, and in PL, let me write depreciation 24. 14 of trial balance and adjustment wala 10. Of adjustment 10,000 and 14 of trial balance. Therefore, total depreciation 24 will come. Depreciation of trial balance will not come in PL charter. Am I clear? Depreciation of trial balance will not be subtracted from asset. Depreciation of trial balance will not be subtracted from asset. It is already subtracted. Correct? Thereafter, opening stock. I'm writing in trading. How much? 60,000. Purchase is how much? 16 lakhs. Purchase return is how much given? 69. 69 plus 1 because of adjustment. 70,000. Yes or no? Plus chartered there was an adjustment. See. Purchases debit 16. Can you see? For sure. Can you see the red line coming here? 16. So purchase will increase. NR I am writing. NR is not recorded. How much? 16. Therefore, 16 lakhs minus 70,000 plus 16,000 is equal to 15,46,000. Purchase return is increasing by 1,000 and sales return is decreasing by 1,000. Yes, yes, sir. Thereafter, sales at 22 lakh. Sales return. Sales return is how much? 99 minus 1. The sales return will become 99. 8. 21 lakh 2000. Correct. Thereafter, there is debtors. Debtors is an asset. There is no adjustment in debtors. How much? 2,50,000. Thereafter, there is creditor, liability. How much? 2,20,000. And there is an adjustment in creditor chartered. Can we see purchase to creditors? So creditors will also increase. Purchase will increase, creditors will increase. Correct. So creditors plus not recorded 36. Thereafter, expenses. How much is the expenses given? 50. Prepaid, last adjustment, 6,000. Yes. Then there is not recorded 12,000, that drawings wala. Not recorded 12,000, that drawings wala. 12. So this will become chartered 44 plus 12, 66. 44 plus 12. Correct? Yes. After that, expenses is fixed deposit. FD. FD is how much? 2 lakh. Interest on FD is 20. That will come in PL credit. Over here, I like gross profit. Interest on FD. 20,000. Cash, asset. Now, cash is given on the credit side. That means that is overdraft. It is cash and bank rather. Make cash 1,000 is given on the credit side chart. I'll show you the trial balance. This. Can you see cash? Yeah, this cash chartered is not cash but overdraft, so it will come in liability. Correct? Yes, sir. Thereafter, suspense is nullified. Thereafter, depreciation, we have written rent. $17,000 is for 17 months prepaid. 5,000 outer column rent will come 12,000. And prepaid rent will come in balance sheet also. Prepaid rent. How much? 5,000. Correct? Thereafter, investment will come in asset. 2,50,000, yes. And there will be interest on investment. Interest on investment is 2,50,000 into 12% into 8 by 12. Correct? Yes. 8 months. Why? August, September, October, November, December, January, February, March. 8 months. So that will come to 20,000. Correct? And that will come in balance sheet asset also. Accrued interest 20,000. Bank balance is 1,69,000. I forgot one, that is prepaid expense. I forgot that prepaid expense of 6,000. Now chart. So trial balance is over. Stock depreciation I have done. Expense to drawing this is done. Purchase creditors suspense page is now. Prepaid expense done. Everything done. So only closing stock is of 1 lakh. Closing stock 1 lakh, that will come in balance sheet asset also. Now let's calculate gross profit. 2102 21,02,000 plus 1 lakh minus 60,000 minus 1546 is equal to 5,96,000 gross profit. 596. Simple. 5 pound. 596 plus 20 plus 20 is equal to 636 minus 24 minus 56 minus 12 is equal to net profit 5,44,000. That net profit minus 58 plus 6 lakhs and 86 plus 236 plus 8,000. 13 lakh 30. Now let's check asset side. Minus 330 minus 2 lakh minus 275 minus. So total, this is also total 13 lakh 30,000. Am I clear, chartered? This is your entire final accounts, trading, PL and balance sheet charter. Am I clear? So that was all for your final accounts. I just wanted to show the final accounts. I hope you would have either solved it or taken a pick or whatever would have been comfortable for you, chartered. And this is your adjustments which we had discussed. If you want to take the pick of it also, you can take. So closing stock, prepaid expense, outstanding expense. Then from accrued income, this is depreciation once again. That example. Then interest on capital, interest on drawings. Then loss of goods. Then interest on loan and contract. Correct. Provision for doubtful debts we had written. Manager's commission we had written, chartered. And that was all for your what we could say about entire final accounts, chartered. So tomorrow we would start with next session. Whenever we will do consignment and NPO, chartered. So all the very best. Thank you so much for being with us. I hope the things are very clear. And this was the final account question. Anything if you want to write from your charter. Correct. This is your trial balance. And this is some working notes we had done, charter. Wrong entry, correct entry. This is your manager's commission. And this is provision for doubtful debts. Correct, chartered. Thank you so much for being there with me. I hope you are doing wonderfully well. I'm sure we will meet each other in intermediate and in the next. Thank you so much. The early bird admissions are still on. Please carry on. It's a chance to teach you intermediate. Thank you so much. Bye-bye. Take care. Sorry, one thing I forgot to tell you. We meet at 3:30 for doubt session. We meet at 3:30 for doubt session.